and welcome to MarketOpen Direct Connect, a webinar series for companies to tell their story, why it's compelling, and why it's an opportunity to invest. I'm your host, Stuart Walters, and we're joined here today by the Managing Director, Kane Marshall of Sacgasco Limited, ASX code SGC. Kane will provide a quick update of the company's operations and will also participate in a Q&A. So if you do have any questions, you could submit them via the Q&A tab at the bottom of your screen. It's now time to introduce our guest. Kane, welcome to Direct Connect.
Morning, Stuart.
Mate, firstly, can you just give us an operations update from the last 6 months, but ultimately, and probably the most important question we have, what have investors got to look forward to over the next 6 months?
Well, the last 6 months, we've seen almost the completion of the Nido divestment. So previously we had assets in North America and the Philippines, so Canada, California, and the Philippines. We've now divested our position in the Philippines, and really where we are now, market cap 3 or 4 people are looking at 10 baggers and how they can get set in the stock and what we're doing next. So it makes sense that previously we've been or still are in North America. We're starting to see all markets sort of responding to the Middle East tensions of the Israel-Hezbollah unraveling, or what's going to happen there, and some structural issues around demand, and potentially a risk-on sentiment with Trump. So you're seeing reasonable prices in that commodity space. So rare earth is an asset that's worth a significant amount of value to our shareholders, but I'm not convinced that that's a place we need to necessarily be over the next 6 months. California is an energy-hungry state. It's our main undertaking of our company. Gas prices there are currently weak. Structurally, markets in that part of the world are a little bit different to Australia. And so that probably answers the second part of your question, is where we're going to next. Now, well, I'll probably allude to this a little bit more over the next 15 minutes, but domestically, we can see what's going on with the energy crisis in the East Coast. Nobody's talking about what's happening in Western Australia. We're seeing a succession of ambiguous and or complex set of drilling results in the Perth Basin. There's a deficiency in gas supply in WA. We're energy hungry. And so we're looking at opportunities that are sort of broadening and diversifying our positions in North America to look more domestic. That's more focused on natural gas, but secondary to that, I don't think oil should be overlooked either, particularly at some point here in Australia, we're going to have more tensions with China. We don't have a reliance on our own crude, and Middle East tensions continue to fuel not only the price side, but we're going to see the supply side affected. So that's what people should look to where we're going. So it's going to be not a pivot per se, but a broadening of the portfolio to probably more domestic upstream opportunities, and rationalising the portfolio. So that's probably where we've been and where we're going.
Good news. What's your view on the commodity in Australia? How do you think that impacts upon strategic initiatives that you're trying to implement in reinvigorating the Sacgasco portfolio?
Well, seeing, both sides of politics wildly opposed, and no one's really addressing the issue, and the issue is supply of reliable base load electricity. And we all know commercially that renewables are deflationary. That typically the internal rate of returns and rate of returns and capex can be rate of returns much lower, capex probably just as intensive. So I think government's going to have to wake up to the supply issue. Everyone's talking about what AEMO's been saying, what's going on the East Coast, but no one's really talking about what's going on the West Coast. We're already seeing double-digit gas prices here in Western Australia, and no new supply. Perth Basin is looking a lot more complicated to deal with that. And, I think people forget that some of that Perth Basin gas is earmarked for LNG. So domestic side, energy markets here are strained. There's no immediate solution. It represents significant opportunity for juniors in this space, thinking outside the box and going to areas that have, had discoveries before, but not necessarily looking for the deeper gas potential. So that's where I see energy markets. I think people are long gold, uranium, copper, of course, and energy. So they're the commodity spaces I think investors are looking at. Certainly I am. And this is a perfect this company at this kind of end of the market is, I think ideally placed to take advantage of that.
And currently the company's obviously Sacgasco, but can you tell us more a little about why the board is ultimately looking to go back to the founding name of the company?
Yeah, well, I think Australian Oil Company Limited is a good name. If you Google Australian oil companies, I think that would be the first one that comes up. So that's a bit of a no-brainer. I think there's got to be some leadership in this space. We're an oil and gas company. We're not focused on biodiesel. We're not investing in solar farms. We're not going to invest in wind farms. We're oil and gas, whether people like it or not. That's what our business is. That's what we're quoted on the exchange for. And it sort of gives some clues as to where we're going. We're Australian and we're an oil and gas company.
It certainly makes sense. And there's also a lot been said about the energy transition, decarbonisation and net zero. Yet here you are with a name that is contrarian to sort of everyone, where everyone else is going. What are your views on decarbonisation, particularly the investment space and the opportunities you see?
Well, I think everyone's in favour of a cleaner economy, but at the end of the day, if you look at materials and what constitutes electric vehicles and decarbonising an economy, a lot of it's coming from fossil fuels. It's coming from the products in terms of roads, wheels, all the stuff that's required to get this stuff out of the ground. The ESG theme and a lot of the discussion around, green projects. Well, just look what's happening in the media now. There's been 700 jobs cut from Fortescue. I think people are starting to realise that it's just a matter of switching to renewables. If you don't have crude supply to just to deliver the materials for a green world, it just doesn't make sense. So as part of that, oil companies are the solution. They're not the enemy, and I think that's why we should embrace a contrarian view that we're an oil and gas company and we can actually be this part of the solution rather than cutting us off at the knees. That's not part of the solution.
We've had a question come in about the portfolio. What do you think are suitable opportunities Sacgasco should be targeting as niche opportunities within this market cap in the Australian capital markets?
Well, I don't think we're seeing really globally there are issues with capex being deployed in exploration, and same in Australia. No one is coming up with new ideas. They're not coming up with going into basins, drilling deeper for gas, building those ideas, promoting those ideas, bringing the capital in for those ideas. There's a lot of companies are really looking at sort of stranded gas, developed gas, smaller pools of gas. I think if you want to be big, you've got to think big. You've got to look at bigger opportunities, looking at where the bigger companies have missed things. Also, we've seen a lot of regulatory issues in Australia over the last few years, and a lot of the bigger companies sort of getting probably a little bit tired of it and looking at abroad, PNG, Alaska, for example, Santos. And so they've dropped the ball in terms of looking at those bigger opportunities here in Australia. So they're the things we're looking at. We're looking at things, oil and gas, potentially subsalt helium plays. And one of the few companies that's listed in this space, looking at those sorts of opportunities.
Can you give us an update on what the situation is regarding the non-payments from Blue Sky Resources after the exit from the Philippines?
Yeah, so I think it was back in April or May, we had the second tranche of money for NITO that was resulted in non-payment. We're trying to work through, what's going on Red Earth. Red Earth, we've been producing circa 700-800 barrels a day, yet we haven't really seen much return on that project. So we're sort of looking at ways we can extricate ourselves from Canada and basically walk away with the company reasonably recapitalised, focusing on things that investors understand. I don't think Philippines and Canada have been areas that have actually done much in terms of value for shareholders. I think it was a good idea at the time. So I think part of that is trying to amicably sort that out with Blue Sky and moving into just getting on with life and moving on from that relationship.
And can you talk to us a little bit about North America and the plans you might have for the company's leases?
Yeah, so North America, we've got Red Earth, of course, I just alluded to, and California. California gas prices have been weaker of late. I'm not entirely sure what's driving that. Obviously, supplies are, there's a lot of gas supply coming from Canada. LNG exporters can turn the taps on. But, Sacramento Basin, as Gary Jeffries probably talked about before, is overlooked. There are bigger opportunities. I think if you're looking at opportunities there, they're going to get the market excited or swinging for the fences. You've got to look at the bigger upside. So looking at things within the portfolio and also adjacent to those that are complementary, that the market can understand, shareholders prepared to put some money into the till, or that sort of, or we could promote out. So that's really where we are now. I think we've got to rationalise the leases that we've got. I think Red Earth could probably be considered as non-core. It's got value, so it makes sense to divest that. So I think it's more bolt-on opportunities and then expanding the portfolio into more domestic opportunities.
Another one's come in around specific projects. On what you can say is, have you got any specific projects under review or currently in discussions?
Yeah, we've got probably about 3 or 4 projects at the moment that we've been looking at. So it's a combination of onshore, offshore, mostly in Western Australia. Low entry point acquisitions, so things that we would pick up with their expertise, can bring in other like-minded juniors and promote out. So we're well down the path of at least one, and then there's at least another one that we're probably a fair way down the path with, and there's another couple we're looking at to see if they've really got scale. When I say scale, they've got to be, onshore, got to be 10 million barrels or 50, 100 BCF. So we're not really looking at things that are 2 or 3 BCF onshore because of the the regulatory cost. You really got to be looking at the big upside and something the punters like.
There's not been much more come in, but there's another one here. So your view on the equity markets, energy markets, and how you would strategically take advantage of any geopolitical issues.
Yeah, well, I think equity markets kind of tied with what's going geopolitically. I don't really need to go on about what's happened in US with Trump, but I think equity markets are risk on. Don't think there's, he's going to obviously want to do a deal in the Ukraine. We can see the Middle East conflict. So I think you're going to see equity markets probably continue to perform to be strong. Energy is a great space to be in. We've suffered here for a long time in this space, particularly down the center of the market, of just not being able to raise money, get projects that are that meaningful. So really, markets are strong, but they're not going to be like that forever. So it's really, I think, about the next 6 months of getting this company properly capitalized and having the right projects. And, all the major economies are facing elections, a little bit of uncertainty, but I think, with Trump risk gone, we're still in inflationary mode. Given we're inflationary and energy is a big component of that, governments have to do something about energy security. So it's a great time to be sort of investing in this space.
Yeah, and just to elaborate on that a little bit more, what do you see as the most significant upside for anybody looking to come in?
Well, the upside is why everyone invests. We're capped at 3 and everyone's looking for 10 baggers and decent projects, and who are the board and management to take it forward. So really, when you go on the road and you see people, the first thing they ask, okay, what's your market cap and what are you doing? Well, market cap's 3 or 4. We've got some money, we're looking to recapitalize the company, move new projects. So really, not much news. You can really easily see this stock back in a 1 or 2 cent range. And then, then you get some liquidity back in the stock. It's easier to actually do things. So that's what I think people will be looking at is, if you look at who's down this end of the market and what they're doing, there aren't really too many. You can probably count them on one hand. And of those, which of them have got problems? And I'd argue that we don't really have that many problems. We're just, we're in a process of recapitalizing the company and getting new projects. So really, you can get set now and it's probably nothing but upside, if I'm honest.
Kane, great to hear. That's all that's come in today. So thank you to everyone for attending today's webinar. Certainly a lot of great information there and a lot of key takeaways. I'll keep you updated for any future Direct Connect webinar opportunities. Kane, thanks for your time today. I know you're working hard in the background, mate, so wishing you all the very best and look forward to chatting again soon.
No problem. Thanks, Stu.